you see the word wealth, the first thing everyone thinking is that it's for rich people. But the reality is that no, it's about building that wealth together. It's for when you all are business owners, and lots of you stepped from that stage of surviving mode on your businesses. Your businesses are now stable, your businesses now are profitable. This is about that stage of the business and how in that stage you can bring a structure, you can bring a strategy in your business financially to make sure your hard work pays off for you better than before. So one thing I want to mention here is that many of us, majority of us, is spending all our lifetime learning how to make money. Few of us ever been shown how to keep the money that we made, actually. And this is about that. And this is about tax efficiency. This is about growing our money and having still access to the liquidity that we built. And things like that, that usually no one talks about it in business. And recently it's become, a thing that I've been so obsessed with. I find a lot of interest in what's going on in that. And it's not working again. Wait, next page. It works. Work now.
New computers are not supposed to have problems, right? Is it okay working out?
Yes,
okay.
working now. So, first thing, the way that you build your profit, the way that you've been building your money, it's not necessarily protecting your money. It's after you start making that money, that earnings, that profits coming, the question is not anymore how to make money. It's always the question of how to make more money, but the challenge, the concern is coming to how now I can access my money without tax consequences, without being in trouble for it, and how I can make smart choices regarding my business. Let's have a quick reality check with tax. We all know that personal tax can go up to 53, almost about that range, percent. So we get incorporated because the first $500,000 we're making is about 12-13% tax, depends on which province you are, and then after that it's going to up to 26-27%. So it's a good strategy. Incorporation is a kind of a strategy on itself, but we should not forget that it's not a tax elimination strategy. It is a tax timing strategy. And timing is only an advantage if we eventually come up with an exit plan. We know how and when we're going to exit from the corporation or whatever we build. So, one thing I'm sure all of you experience, and if you're not, you're going to experience, is that you start making money, this is accumulating in your business account. For a while you're thinking that, let it just be there for now, I think about it later. You go to the bank to do some transactions, the advisor persuade you to buy this GIC, to buy that mutual fund, to do this investment. You find some other opportunities of investments, and you start using that money, you thinking that that money should work for me, should be invested and work for me on its own. So you start investing in different things, quietly, without you know it, without you realizing it. Suddenly your operating corporation now is an investment corporation. Now you're in a different tax game than where you started. Because there was no plan in place how to grow your money without getting into that trap. And all that investment, when they make money for us, then they are profitable. They are not part of your corporate operation income anymore. They are passive income. Passive income is good because we are not sweating anymore and working hard to make it, but it's decreasing that tax bracket, amount of income that we have to be in a lower tax bracket. Is bringing us to a higher tax bracket, is becoming to about 50% tax again. So how we can avoid all this? That's the question. How? Is there any place in tax system for us to grow our capital, to access our capital without the tax friction annually. And the good news is yes, there are solutions. There are places that we can actually save that taxes. So, when we read about life insurance, I know it has lots of skepticism, lots of negativity into it, but we need to look that in life insurance is not necessarily just protection. It's not a defense purchase. If it be used strategically, be strategically incorporated into business, it can become a powerful financial instrument. And this is the instrument that can grow your money tax efficient, give you access to liquidity anytime you need it, anything unexpected happening, help you plan for succession, help you plan to exit the business on your own terms, help you plan for legacy. If you have family and you're thinking of how this is going to get to their hands, it helps to plan for all that. So, what I'm talking about in life insurance for business. And let me tell you this, I'm not a life insurance agent, and my job is not to sell insurance. My job is planning strategies that is good for your business. But one of the strategies tonight I want to talk about is this specific strategy, because it's really, really powerful for a number of businesses, and I've been using it to help so many businesses recently. I don't know if any of you heard about IFA, immediate financing strategy or immediate financing arrangement. What's happening is in IFA, you're getting the life insurance for business. The corporation owns the life insurance, the corporation pays the premium of the policy, and also is the beneficiary of the policy itself. The way it works is that pay the premium, get the collateral loan, invest the money. I will explain in more details about how that works. So, the borrowed funds that you can have now access tax-free through this policy. You can use it for retirement income, you can use it for investment, you can use it for your lifestyle, whatever you need it, you can use it for. And the good news is that it is help you to access that money, that liquidity, without triggering any tax, and is not also counting toward your passive income. So that's a threshold of passive income that every business can have. It's not filling it out, so it's giving you options to have other solutions, other plans, other strategies also going on. Let's move on to a case study. So I mentioned that I helped a lot of clients before, and I want to show you one of those real cases. This being a dentist about age 42 that me and my colleague here helped her. Dentists are well off, they're making good monies, and their return earnings are prospectively high for what they're making. So after planning, after checking everything, we came to the possibility of annual premium of $150K a year for this specific person. But it can be higher or lower depending on the business. The time of the policy they're going to have is about 10 years, and the interest loan that they're getting is 4.45%. In the big picture, the projected outcomes in 10 years that we're expecting for her is that about 1.5 million that they're putting into policy about in 10 years, it grow to 9.6 million for them, tax advantaged, tax sheltered. After the 10 years, that lady would be 52. Imagine she can, if she wants to, she can get retired at that age. And for 20 years, till 72, she can have access to retirement money, retirement income, about $291,000 a year retirement income. And also, God forbid, whenever she passes away, $3.8 million tax-free will be given to her beneficiaries. Let me give you more details of how this works. So, this is insurance involved, and insurance is very much about your age. The younger you are, the cheaper the insurance is, the premium is. So the cost of insurance is lower. At age 43, at 1 year after she gets this, about $1,200 she's paying in cost of insurance. 10 years later is about $8,000 of that $150 cost of insurance. And that cost of insurance also is a business expense because the life insurance belongs to the corporation. So this is an expense that they receive tax deduction on. But that $150 is not, disappearing, is not paying insurance companies. That $150 is redirected, is repositioned inside the business for them, increasing the insurance value. We saw 1.5 million growing to 9.6 million. And it is that borrowing collateral that they're using to get the liquidity they need from the business. The interest that we talked about, let's say in 10 years the 4.45 is not changing. It's not a fixed rate, it's variable, depends on prime, so it can go lower or higher, depends on what happens to prime and market. But let's say it's stay for 4.45. The first year she's paying about $6,700 in interest, and that is on 150. Now every year she's adding 150 and she can get a loan of another 150. So after 10 years, in the 66,000, about 67,000 interest is on 1.5 million, is not on 150. And as we all know, interest payment of a loan is tax deductible. So the first year of 6,700, she's saving 1,500, about more than 1,500 of it in tax deduction. And on the 67,000, over 50,000 of it is again saved for her through tax deduction. So twice tax deduction has been an advantage for her. So let's review what we talked about. The business, as we all are going through, it can be without any planning, without any strategy going on. There's always a challenge to access the liquidity, how bring the cash out without tax consequences. Our access to our own money is limited, and we are fully exposed to tax every year, every time that we do anything. With right strategy in place, we can have our capital repositioned to work in our advantage. Our liquidity is available at any time. Our growth is protected, is sheltered, so we don't have to be worried about taxes. And if estate is one of concerns of yours, it helps enhancing that. And again, IFA is one strategy. My job is review with you and find the right strategy for you. So let's talk about, I'm repeating that this is not for everyone, it is planning. So who is this strategy fit for? So if your corporation generates consistent taxable income, your majority of you are, I talked to you, you are in the stable phases of your business. Shareholder has a permanent insurance need. We all need insurance. It's part of reality. None of us like it, but it is real. But we can take advantage of that and not make it just a defensive move, not just something to be there for, God forbid, the day that something happened to me. I can have it and I can take advantage of it and make it work for me to the best of it. Also, if your horizon is long-term, you are thinking about what will, when I get retired, when can I start, stop working? What happened after I die? How this business, how this wealth that I built can go be transferred to my family. If you have these questions, if your horizon is long term, it can be helpful to you. And also if you are comfortable with structuring that, because that 10 years you are borrowing money. If you're comfortable with borrowing and having debt, I know that some people they're not, so if you're comfortable with that, it can be a good strategy for you. One important thing I've been constantly telling people, lots of people telling me that, yeah, this sounds good, this sounds nice, but maybe later, maybe next year, I'm not ready for it yet, I haven't made that much yet. One thing we forget is time is our biggest asset, and unfortunately, unrecoverable asset. When time passed, you cannot take it back. And with time passing, our optionality coming down. Our optionality coming down, our control coming down. We don't have that much of option available to us anymore. That powerful options, that powerful tools that we can use, and they can help us build bigger business, bigger wealth, protected one, they may not be available anymore. So time is a huge asset that we should be always aware of when we plan. And one last thing I want to tell you is that every business that is well structured needs a proper intentional evaluation. None of us can plan in isolation. None of us can plan alone. We need to, come together to bring our expertise together to plan. And it's not always my job alone to plan. I collaborate closely with accountants, with legal advisors to make sure that the plan we're putting in place for your specific business is something that can work for you in every aspect of your business. But not having any structure is costly at the end of the day. So, if you feel that there is room in your business for a strategy, if there is room for planning to grow tax efficiently, to have access to liquidity without concern and pressure, I welcome any conversation. Thank you.